Welcome to today's video on euro dollar. Euro seems to be under quite a lot of pressure as the US continues to benefit from the stronger economic momentum and the renewed demand for the safe haven. Ongoing geopolitical tensions in the Middle East have certainly increased uncertainty all over markets. This is keeping the investors more biased towards the US dollar, as the high US Treasury yields are certainly awarding investors. Now, the recent US economic data has reinforced that the growth remains resilient in the US. The manufacturing activity also seems to be improving. Labor market conditions seem to be staying firm. And this just goes on to support the view of the Fed that they will continue to maintain a restrictive policy stance for longer. All of this is again contributing to the elevated US Treasury yields. In the Eurozone, the inflation seems to be above the ECB's targets and markets continue to price further rate hikes in the coming month. The policymakers have maintained a very hawkish tone, indicating that inflation risks remain a key concern despite slowing growth. Let me remind you that we're expecting currently a rate hike in the month of June as well as July. Energy markets are a big variable for this outlook. Any prolonged disruption to global oil supplies could push energy prices further higher, adding to the inflationary pressures and potentially strengthening the case for higher interest rates globally. Now, such a scenario would certainly weigh more heavily on the energy dependent Eurozone economy. From a technical perspective, Eurodollar seems trapped in the currently highlighted consolidation range. Any sustained move or a break above 1.17 will open up the doors towards 1.18, while a break below the 1.1575 may expose the pair to a further downside of 1.1450. Now we need to keep a look at the support and resistance levels as this market still continues to trade sideways. Exporters can target levels closer to the resistance we can see on the chart, anywhere close to 1.17 and above, and importers can probably wait to see if the prices move below the EMA support of the 200 day, as we are still just hanging on to it by a thread. Thank you for hedging.